So have ETFs lost their edge in 2025? Are they still delivering solid returns? Let's look at the top ETFs in Australia just to see if they're still delivering good returns, whether they're still worth your money. And because I've done this before, I'm also going to compare holding the ETF to its top 10 holdings to see where your money would have been better spent over the last 12 months. Now, last time I did this over a period of 5 years, I think. This time it's going to only be 1 year. So I'm not expecting the results to be quite as dramatic, but we'll see. So let's look at VAS, IOZ, and A200. They're all very similar. They all follow the ASX 200, well, the ASX 300 for VAS, but they should have all, you would hope, similar results. Well, let's go and find out. While we're here, we should also look at some global ETFs as well as the ones that deal with Australian stocks, just to compare, to see where the landscape is right now. So let's jump on the computer and figure this out.
The ASX 200 went up 10.65%, and all three of the funds were very similar. VAS went up 10.63%, A200 went up 10.57%, IOZ went up 10.31%. Mostly the difference will probably come down to what the fees were and what the weightings were. There isn't a huge amount of difference though. Now, the top 10 holdings in each of these funds usually make up roughly around 50% of the entire fund. And in all of these cases, the top 10 were exactly the same. So let's now just compare the top 10. If you had have held the top 10 of those companies within that fund, and this is without doing any research, you're just holding the top 10 of that fund, of those three funds, what the difference would have been compared to the fund as a whole. And in this case, over the term of 1 year, probably around 1 to 1.5% higher. Now, 1 to 2% higher doesn't seem like a big deal, but it can add up over time. So let's look at 5 years. All of the ETFs rose just over 40%, which is great. The individual stocks either went up or down, with some notable performers, with a few of them such as the Commonwealth Bank and Goodman Group doing exceptionally well, and NAB as well. But again, over the long term, over a 5-year period, you would have made more with the top 10 rather than the fund itself. It is worth noting that the international ETFs did slightly better than the Australian shares ETFs over the past 12 months. VGS was up 15%, IVV was up 15.7%, and QUAL was up with just nearing 6%.
So yes, ETFs are still really good and worth it in 2025, although it depends on your goals. Now, the example I used pitting the top 10 against the whole of the ETF is a little flawed because you're comparing 10 companies to 200 or 300. ETFs are a lot simpler and you are getting much more diversification and therefore lower risk. And even though we didn't do any research in choosing the 10 companies, we simply chose the 10 that were the top in that ETF or in most index ETFs in Australia. And yes, that 1% or 2% or whatever can accumulate and compound over time. It really does depend on your goals and your risk tolerance. So ETFs are still useful for your portfolio, although some are better than others. And in a future video, I want to talk about the ETFs that I actually think are really worth your time. And they're not always index ETFs. I'd also like to discuss in a future video the trend of AI in choosing stocks. A lot of people are using AI-driven ETFs. And while that's interesting, I would like to examine that further and to see if they actually choose decent companies. So there's definitely further conversations to be had with ETFs, of course, but next week I want to discuss when you have a portfolio, when's the right time to buy, when's the right time to sell, and when is the right time to hold, especially as a dividend investor. Anyway, I hope you've enjoyed this video. I'll see you in the next one. Happy investing. Mwah.